The Fed maintained accommodative language in its communique while stocks reacted positively to corporate earnings. Futures point to a flat open as the focus turns to jobless claims and very heavy earnings calendar. I'm Taylor Strantz, and the morning call starts right now.
Good morning. I'm Scott Rudler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrina with The Street, and together we bring you your morning call. Scott, I'm excited for today's call. We have a lot of great stuff on tap. We have Apple out of the way, FOMC communique. We have all that language out there, and it really said that we're not doing anything. It was like a big fat maybe. So before we get into our trading plan, let's take a look at the action over the past 3 days.
Yeah, well, we've been in corrective mode ever since the top, I would say almost about 4 weeks ago, and the question was how much? So we pulled about 5% off the highs, so it wasn't that extreme. Macro investors, you really didn't sweat too much. As an intermediate trader, we switched some gears, we got a little flat, we got short, but then you came in on Monday and we were looking to see how would we handle that pivot low back from April. So if you take a quick look at the chart, you will see, remember that low here? This was April 10th. We talked about the importance. That was 1357. Okay, we bounced back to test this rebroken trend line. And then on that Monday, which was very important, we put a small double bottom. Double bottoms have to be respected. The question was, what type of bounce would we get? So now we're 3 days into a bounce right up to resistance. This 1390 is going to be big time resistance. So I would think with a day or two of digestion, that will be the next rubber match between the bulls and the bears.
So we have jobless claims today. We have a slew of economic data. Thursdays always tend to be the heaviest days with the jobless claims. We got to get those numbers down a little bit. They weren't that great. So we'll be looking at the actual number printed this week and any revisions. But Scott, what levels are we looking at as we start off trading today?
I think as far as the claims which you mentioned, we need a positive report because they started to revert back. So all of the positive U.S. data that all the bulls have been hanging their hat on needs to be maintained, because obviously the news out of Europe is still a little faulty, that they're still out of the woods, but at this point we're kind of diverged from them a bit. So the level that, again, that I'm watching on the S&P, if you go back to the chart, is right now this resistance area. You had a big move in the last 3 days. So I would say, as long as you want to take a closer look here, as long as we maintain above half of yesterday's gain, if we could stay above, just say, this upper end of this little channel here, so you want to draw this into a channel, make it a more micro version. Here is support, here's resistance. If we could hold above 1378, 1382 in the upper end of it, I do think we take out this 1390, 1392. And then if you're a stubborn bear, you better cover, because if you start rolling it up there, and I think guys are still rolling it up, you could be in trouble, because IBD, which I follow very closely, they just put us back in a market uptrend. So that means technicals are getting a bit more constructive.
Moving along to the sector spotlight, we're going to take a look at my 2012 pick, the agricultural group, Mosaic being my top stock pick. This is a back half story. We're looking at this long term. Q2, we still see a little bit of choppiness. We're trying to figure out all the pricing and how the input levels are going to factor into these bottom lines. We're going to look at MOO, which happens to be the agribusiness ETF for the group. It was one of the top performing ETFs overall in the market yesterday.
Yeah, I think this is good as a basis and also good for investors, because if you don't know which stock to pick and you don't want some of the risk on individual ones and you want exposure to the group, you could buy something like this. So this is a sector you're in. If you take a quick look here at MOO, great name for the ags, you will see that it's been holding this big support. The support that we talked about a few times here is right around the 50 area. And look at this 3-day move. That was powerful, guys. That was a little bit more powerful than most other groups in the market. It actually already took out, just say 1390 was big for the S&P. This was really big for the ag space, and it took it out. So at this particular point, I would say if it could hold this gap, go sideways, you're going to see new highs on the year, especially if the thesis, which is what everyone's talking about for the third and fourth quarter, starts to come into play, pretty big time.
What's interesting with the thesis, when you look at the ag space, it's a supply and demand story. It's very basic. It's about stuff. It doesn't get any more basic like that. It's not quite as sexy as like a tech name or a biotech name. It doesn't have the fiscal moves that a consumer name might have, because it really relies on consumer and enterprise spending. I was at the CME last Friday talking to one of the guys in the corn pits, which is a real big underlying commodity in these names. And he's like, Jill, the story is not only is it back half, but everything is priced on futures products. That's all that you need to know there. Your demand is already sort of priced in. Moving along to Mosaic, ticker MOS, my 2012 pick. I think this thing is so cheap right now. If you're willing to think a little bit more long term, I think you could get to the mid-60s with this one.
All right, well, mid-60s means it clears all the lower level resistance. And as of now, yesterday, at least the report's out of the way. It acted pretty favorably. You have new points of reference. You know, there was volume there, so it woke up. So if you want to take a quick look at Mosaic, you will see that it was trading off of support. And I think last time we spoke about it, he said, okay, you could buy it versus support or buy it versus recent pivot. And now, you got somewhat rewarded. So now technically, what I'd like to do is I'd like to see it hold this gap. If it can go sideways, okay, and show commitment to this gap up yesterday, I do think it'll start acting much healthier, and then you could buy more above yesterday's high, which is about 53.74, and then above there you have, moving average of 55, and then you have this downtrend area around 57. So at this particular point, it's back on the map technically, and I think sideways action, and then we continue higher. And if the fundamentals, like you say, come in, it could get really exciting.
Same thing with potash. You're looking at the same sort of metrics. Estimates came in a bit because we saw some destocking, but once those potash shipments resume, North America, Latin America, Southeast Asia, that's when you're going to start to see that bid come in.
And the earnings were out this morning. I think revenues were in line. The top number was a little bit off,
right,
but they seem to buy these ags on bad earnings. So don't get too discouraged. People aren't expecting much here. The stock hasn't done much, so it's not like pricing in a great report. If you look here at POT, you will see, it did wake up a little bit yesterday. It was up. I would say right now, as far as composure for the day, watch yesterday's low. Watch this 43 area, low, and then obviously if it, this big support. It would be very, very, I'll be honest, disappointing if it goes below 42.41 and closes below there. If it could go positive today, or even, maybe almost go positive and hold in there, I think then with a bit of time, it takes out this 44.91, and then you have really big resistance coming into about 47.85. That is your macro pivot. Here is your micro pivot.
That's what's so great about these names, because it really identifies what we do. We have longer term theses, whether we're on the longer short side, but we also have the ability as traders to play the momentum swing. So we're going to take a look at CF. The T3 traders did a fantastic job trading this in 2011. The focus here is going to be the share buyback for the longer term.
Yeah, and then also next week they have their earnings. I wish their earnings came out already, because I love this chart, and I hate to be involved in the stocks for earnings because of my risk aversion nature. But look at this chart here compared to the other two. This is my favorite for this year because of the relative strength, and it's close to the highs. And look how this held higher during the entire correction. It held above 180. It's above all the moving averages. Yesterday, while you saw some choppiness in some of the others, it closed very clean. It closed strong. So right here, this 192 area is a bit difficult. I'm not sure if they're going to just let it go to 195 or 200 without the earnings report, but it would be nice to see some continuation here. And if POT goes positive and the ags get another day, I would be buying more of this through 192.35 for then what could be a move to 200 pretty damn quick. And
wrapping it up with Agrium, if anyone can benefit from the horrible price action in natural gas, well, not horrible if you're looking for it to be real cheap, AGU is one of those names because it's so involved with their input costs. They have seasonal demand coming in the back half. They have that cheap natty gas. They're not hedged at all, so they're getting it at today's real cheap prices. Well, this one, like CF, technically looks better than the prior two. So if you look here at this pennant, it started to break above yesterday. Okay, this also above the moving averages in the high end of the range, not the low end of the range, and it closed relatively strong. This also is one that we used to trade a lot last year as well. So if you look here, it's above this trend line. I would say maintaining above this 86.72 would be very, very constructive for this. This is a leadership, in this group, and I would say above this, traders will probably be looking to buy at 88.50, and then you have the highs here, and this is also a candidate to make new highs first with CF, in my opinion. All right. Well, if you guys have that long-term stomach and can trade it in between, this sector is definitely for you. We're going to go to a quick commercial. When we come back, we jump into the trenches.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the morning call. We're going to look at the tech space when we jump into the trenches. Really interesting here, Scott. At the Dow 30 names, 5 of them are comprised of tech. They're paying $16 billion in dividends. That's the highest out of all the other sectors. You would expect energy, you would expect consumer. Maybe it's skewed more to energy now that XOM took up their dividend, but I think it's a really interesting fact. Before we take a look at our individual names, let's check out what's going on in the Qs.
Well, first of all, that's a great fact because typically the tech sector has the best balance sheets. They have the limited
Lots
debt,
of cash.
very clean, lots of cash. So for them to be giving some out and be a growth story, I think that's why guys are getting excited, and that's why we've been seeing excitement in the mega caps as well. So if you look here at the chart of the Qs, for any healthy market, you need leadership in tech. And right now, the Qs are back above the 50-day moving average. We came into support. This is what I think we drew earlier in the week. But now we're heading back in some pretty significant resistance. So at this point, I would say, after this move from the lows, all I want to see is some sideways action. I want to see the Qs go sideways for a few days, and then I do think if we can start getting above 66.50 with some authority, you see some follow through with Apple, some follow through in some of the tech, I think that this is going to be a leadership group, and if you're going to be long in the market, you have to be in tech and in some of the Qs.
It's nice to actually talk about tech and not only have it focused on Apple. We're actually looking at other fundamentals and the charts to confirm that this group really is leading. Let's kick off our individual names. Microsoft. This was one of the first big tech names that started paying that dividend in January 2003. And look, it's starting to gain some momentum now, especially with their consumer products.
Yeah, and I think people welcomed the report. People were looking for a good report at the time, and Microsoft delivered. The real move started back in December. I think I was on Bloomberg. I was talking to Margaret Brennan, and I said, look at Microsoft. You can get frisky this year. And everyone was like, what do you mean? Microsoft and frisky aren't in the same sentence. So if you look here at the chart, you will see that there was a lot of different ways to make money here or skin a cat. The reason I was getting excited way back when was when it broke this downtrend. Okay, you broke this downtrend, so that's what pretty much, I would say, impulsed or ignited a really big move. And obviously, after a big move like this, you see some type of pullback and you see some type of digestion. So now, fast forward, if you're not in Microsoft, you know what? I think you still could buy some in this little flag pattern. I think that you're going to see it consolidate a little bit more. And then once Microsoft could start getting above this 32.89 or 33, you're going to see some continuation. And then you actually have to go to the weekly chart, maybe the monthly chart to see where it can go. And the next real level in Microsoft or real resistance doesn't come up until about 37. So, from this area to 37 for Microsoft with the dividend, not so shabby.
Right. Moving along to IBM, we've played this name several times with me, with you, with Evan for Options Profits. What's really great with this name is 80% of the business is on software and services, and they're continuing to make these acquisitions, which are the high-margin businesses. We're looking at 52-week highs, and we're also looking at 52-week lows in terms of implied volatility. So this sets up for some really interesting action.
Well, this one technically was something I was focused on a few weeks ago, and then it started its pullback, which was fine. And now it had a nice snapback. They announced some news, they increasing their buyback, increasing their dividend. That's what investors want to hear. So if you look at it, I think it was pretty healthy. That remember we talked the first time off of this low here. We said if it breaks 202, you could be buying right around this support where it previously broke out. You have to write that down technically because a lot of guys who missed this were waiting for an opportunity. There it was. So now we're back above this 202 area. So I would say with a little sideways action, you have a downtrend coming into play as well here. I don't think it just busts through on the first attempt, but holding above 200 for a little bit, showing some commitment above that level, I think you could still be in it. And then perhaps for momentum, once it starts getting above 203.60 for it to resume, that upward trend. But I think it needs a little bit digestion before you just jump in here.
Intel looks really interesting here. Reported earnings did a great job with the quarter. It was at its 52-week high. So obviously investors took some money out to finally get rewarded for holding the stock. But what's interesting is their chips are now going to go into smartphones. Intel doesn't do anything small. There's billions of units that this has potential for. So it's going to be really interesting to see how this plays out over the next 2, 3, 4, 5 years. But Scott, as a momentum trader, what levels are we looking at here?
I think for Intel, it's going to take a little bit more time for momentum, but Intel has been one of the stocks that rewarded you early. Like Microsoft joined the party this year. Last year, Intel started to act much better. Remember all those reports where they had record earnings and they would just sell it? Finally, it got some traction, and I think the traction is going to stay there. So if you're an investor in Intel, stay the course. If you're a trader, take a look at the chart. It's a bit choppy here. They were pricing in a really good report, which I thought they had. It was on the highs. It came back in, came to the 50-day. It held it. It responded well yesterday. It still has to get above this recent trend line that it broke. I think with more sideways action, you could see this gap fill back to the low here of 28.41. I think as a trader, I don't think it's something that's going to be frisky for you as an investor. I think you could still hold it, but then we'll get a better setup in Intel, moving down the road.
Now, Microsoft, Intel, and IBM were part of those names in the Dow 30 that are paying those healthy dividends. But I also want to take a look at STX, Scott. I love this name. Firing on all cylinders. The price action's been real interesting, and the earnings ramp is actually for 2013. So there's a lot of opportunity in between then and also for the long term.
Yeah, this one is pretty funny because they always say with the disk drives that the business is over and that they're getting cannibalized, and then the flooding and this and that.
And they got the business in Western Digital.
And it just looks really good. And at this point, it's acting the best. It's on the highs, where a lot of tech stocks are not on the highs. So as an investor, you've been paid. As a trader, you take a look at the chart. I think you want it to be there yesterday. I like when you have a nice tight pattern and then it breaks out to the upside. So after a move from big support around 24 to breaking above this resistance, which was about 29.88, I think this was your follow through. So if you're not in STX, I don't think you buy it up here just because of the way it's extended. As an investor, you've been rewarded. I think if you get some kind of pullback, maybe you get in there, but as a trade, I think you missed the setup. It was yesterday.
And let's wrap it up with Texas Instruments, ticker TXN. This name crushed the quarter on every metric. They're starting to see the bottom in the cycle, and they're firing on all cylinders across all markets, across all verticals.
All right, well, Texan is something that I haven't looked at in a while, so I'll take a look here to see what the technicals are telling me. So if you take a look at Texan, you will see what did it do yesterday? Yesterday, it had a green day. It's still going sideways. It's still, I guess, holding above this area. Technically, I think this needs a lot more time. You do have a channel if you're a fundamental investor and you want to buy in low ends of the range and you have time. This is a spot, but I would think that it would start acting healthier if it could start getting above 33, and then you have a free trade to the highs, and then above the highs, you go to your weekly chart to take a look. So I haven't seen this one in a while. That's a big area. This 34 is a big area. We break this. You have some leeway to 34, above 34. The highs here on Texan is about 36.71.
All right, let's move along to quick hits for quick cash. It wouldn't be a morning call unless we spoke about Apple. This name just blowing away the quarter, up just about 9% yesterday, Scott.
All right, well, with Apple, it's going to be a little tricky. Remember last quarter they came out and you could have sold the open also for a little cash flow. Well, yesterday was the same thing. You could have, sold around 615 to 618, and then you had to buy back on the strength. We have 2 new points of reference to trade against. I think you might see a few days of consolidation and then go. I'm going to make this a long hit because I always make Apple a long hit. I just want to, show you what happened the last time on earnings. Last time on earnings, this was the gap up, and it was fadeable. You had 2 inside days where traders were trying to trade it. They were knocking their heads against the wall, and there was nothing. That was right around here. And then I remember buying it once it started to go above this little pivot here. This pivot here was 449. Then you could have added above that earnings high of 454, and then that's what happened. So you go to Apple today, you fast forward. This was yesterday's action. Okay, you have the high here on Apple, 618. You have big resistance here at 620. So that's good. That's a new pivot. I think it's going to need a few days of action before it could actually get through that because there's massive resistance right there. So I would say watch 606. You could trade it long versus that area. If it goes below 606, I think if Apple's going to be really, really strong, it could be buyable around 590 to 596 and probably shouldn't break that area and hold the rest of that earnings gap.
Moving along to Priceline, last Thursday in the morning call, we started to take a look at the travel names. Priceline, one of the best in that group because they have those nice, high, healthy margins. Scott, yesterday this name was up over 6%. Do you think that momentum will continue?
I think Priceline is a tough animal to get your hands around. It's hard to trade if you're still in there as an investor. Good, congratulations. I typically get this wrong because I always want to short Priceline because I don't like their model, but who am I to not like it? I'm a technician, not a fundamental guy. At this point, as long as the market stays, somewhat constructive, this is a leader and people will go to it. I think above yesterday's high, you can get a bit more cash flow, but I would just be a little bit more conservative here.
All right, and let's wrap up the call with the casino names. If we're going to talk ags, we have to go to Scott's go-to space. Scott, you've always traded Las Vegas Sands and win really well. We haven't visited those names in a while. Let's take a look at some price action.
Well, we haven't visited them because they've been a little sloppy, just like the whole market in the last few weeks have been sloppy. We've talked about LVS as a macro hold and also a good trade. And when it had that outside day right here in April, if you take a look at LVS, here is your little bit of a sell signal. Obviously, it's had a huge move. This was a buyable area around 47. Last quarter, it was buyable at 50 and change. And then you had a lot of trades along the way till finally, it hit a little bit of a top in a soft market, and it pulled back to the 50-day. Very healthy. Yesterday was up pretty nicely through the moving averages ahead of earnings. Earnings came out. There's a lot of mixed talk on it. Some people think it was great. Some people think it was soft. I would say stay involved in LVS. I like it as a long. I would say if you're uncommitted, watch this 56 area. If it breaks through 56, maybe the trade changes. But as long as it stays above 56, I think this will be a leader for the rest of the year also.
All right, guys, we got a huge day on tap today. Those jobless claims, make sure you're paying attention to those numbers and all the earnings calendar that's going to hit the tape. Catch Scott at the end of the day, Real Money, Options, Profits, and T3Live.com as he wraps up the charts for us.